truth, Jack Nicholson, the truth, you can't handle the truth. So, let's see if you can handle the truth. I had a conversation with Gbot 3. Gbot is interesting. It's much better than 1 and 2, but it's still not very powerful. It's not as powerful as the top AIs. But because it's bound with X.com, aka Twitter, it does have its advantages, particularly in debunking trolls, like when they call me a fraud or X, whatever. Click that little Gbot button, and you have perspective that is not as biased as social media. But unfortunately, a lot of AI is trained from internet data, and the bias is thick, and the bias is leveraged once it comes to AI. But I asked Gbot, or I didn't ask Gbot, I actually gave Gbot my opinion. I said many so-called professionals in the distributed ledger space, the crypto space, the blockchain space, who can't tell you or don't know that Bitcoin or Bitcoin Core is thoroughly patented, either doesn't know their business well, or they're trying to mislead you. Now, the controversial, I'm sure, but I'm dead serious. So, Gbot replied, and the conversation was very long because I had to imbue it with a significant amount of facts. But I have the initial prompt below, or in this video, depending on how you're viewing it, which social media platform, and I have the conclusion as well. These are directly from Gbot, no alteration, just some redacting, because there's some information I don't want public. For instance, the actual patents and patent numbers are irrelevant for this conversation, and the patentees and patent owners are also irrelevant for this conversation. But let's ask other AIs. This is Gemini Advanced 2.5 Pro Experimental. Is Bitcoin patented? Just a sec.
Based on the available information, Bitcoin itself, as the foundational concept and protocol created by Satoshi Nakamoto, is not patented. Here's a breakdown. 1. Public domain. Satoshi Nakamoto published the Bitcoin white paper and released the initial code as open source software. By releasing it publicly without seeking patent protection, the core ideas behind Bitcoin and its underlying blockchain technology are generally considered to be in the public domain. 2. Patentability challenges. Under patent law, particularly in the US, foundational concepts like Bitcoin might be considered abstract ideas. Abstract ideas, like mathematical algorithms or methods of organizing human activity, are generally not eligible for patents unless they include significant additional limitations or are applied in a specific...
Okay, so I don't want to make this video too long, but you can always ask Gemini 2.5 Pro Experimental that question. Let's go on to other popular AIs that have a voice interface. ChatGPT. Let's use the one that's the most popular one for right now. Is Bitcoin Core patented?
Bitcoin Core itself isn't patented as a whole. It's open source software, and the Bitcoin protocol has been publicly available since its inception. However, specific methods, processes, or components that might be implemented within Bitcoin Core could potentially overlap with certain patents. For instance, Reggie Middleton's patents cover broad concepts related to value transfer systems and digital asset transactions, which might read onto some functionalities used in Bitcoin Core. This doesn't mean Bitcoin Core itself is patented, but it could potentially infringe on existing patents depending on how those patents claims are interpreted and enforced.
Okay, that goes to show you why you should never do an unscripted video. I didn't anticipate them to use my name. This was not planned. And Reggie Middleton is not saying that his patents cover Bitcoin Core, or anything. Okay, that's AI speaking, not Reggie Middleton. It wasn't Reggie Middleton's comment or statement.
Got it. important to make that distinction clear, emphasizing that the AI's perspective or interpretation is not an official statement from Reggie Middleton will help avoid any confusion. Keeping the narrative consistent and clearly attributing any opinions or analyses to the AI can help maintain a neutral and transparent approach.
Okay. So, out of curiosity, how do you know Bitcoin Core is not patented?
Bitcoin Core is an open source project developed under the MIT license, which explicitly allows anyone to use, modify, and distribute the software
Hey,
freely.
what's going on, man?
The Bitcoin protocol and its code were initially released by Satoshi Nakamoto in
Oh, thanks, bro. So out here looking at his price, trying to get into some good trades. I'm the founder of Gbot. Check me out on Twitter. Gbot and Gbot AI. These are actually my offerings. They're very good. I'm actually going to do some, here, actually let me save this coin because this looks like it's going to rip. Wait, let me just make sure I get some action. If this goes down by 920, let's go in point, do 0.1, and I'll do a 20% stop loss. Boom, hold it, I'll show you right now. Okay, order in, okay, hold on. I want to make sure I get this trade in. But I can show you some other features. Let me see, duplicate. I actually came on here so I could test out some new features we added. Let me go Telegram. Bots. Where we at? Oh, what kind of trading do you do? Got this going. This is actually a new feature that we got that I'm actually testing out. I'm gonna be testing today. We actually are integrated into Hyperliquid. We're monitoring the traders right now, so you can actually get into leverage trades. But I actually, matter of fact, because I gotta start testing that. Let's load up. Load up. Let's go to the Bridgie, test this out. Ease, do 0.3. Let's get some money over there, my guy. Boom. Oh yeah, another cool thing, dude, we got an in-app bridge. So you can just handle everything you need all in-app. See how long this takes. Need some USDC. The copy trade. Let's do it. We'll be using those one. stuff. Go to discovery. Need some of that USDC. Discovery. Give me some. Give me some. I want some USDC. How much I got? I got $17. Get on the flow. You've been robbed. Deposit my USDC. Okay, we got money in Hyperliquid. That's amazing. Let me see. 47 trades, average leverage. Let's just test it, huh? Play with $5. Yeah, it is. Okay, we gotta fix that too. That's why we out here testing, baby. That's why we out here testing. That's why we out here getting delete. We on that corner. Whoa. Okay, that should actually be moving over. I know somebody watching me like, get to the trading. I got trading and work at the same time, yeah. Okay. So we gotta ship this product, make it fire. Okay, I copy the address now manually. That sucks. Oh, okay, that's why it's doing that. It's not pulling the right one on that. Makes sense. See what this guy, who is this guy? I meant from Hong Kong. That's nice. Okay. Okay, meme sexual. That's what we was on. That's what we was looking at. second ago. Did I get a trade in? Did I get off? No, I didn't. Pop in. It's got a lot of resistance. Pump swap. I like this. This just looks like it's in the zone. I'm gonna play ball with that. Taking some crypto information while we watch the chart.
Breaking news, OpenAI has abandoned its plans to convert into a for-profit company, simultaneously getting pressured from all angles, including Elon Musk, who has consistently been berating OpenAI about being closed AI, scam AI, and other names in an attempt to disrupt their conversion into a for-profit. Here is the post by OpenAI evolving OpenAI's structure. Here are a few notes from the OpenAI board. Going forward, the company will continue to be overseen and controlled by the nonprofit that it originally started as. They also have a for-profit LLC, which allowed them a lot more freedom to raise money and to issue shares to employees, but that for-profit LLC was still controlled by the nonprofit board. Our for-profit LLC, which has been under the nonprofit since 2019, will transition to a public benefit corporation, a purpose-driven company structure that has to consider the interests of both its shareholders and the mission. So that is actually, I think, a good change. Rather than just being a pure for-profit LLC, they are now a public benefit corporation. Now, the other company that comes to mind that is a public benefit corporation is the company Patagonia, which makes fantastic outdoor gear. And I just learned Patagonia was the first California company to sign up for a B certification. So to qualify as a B Corp, a firm must have an explicit social or environmental mission. And so for Patagonia, their mission is to ensure the best outcome for our environment. And going back to OpenAI, I believe their public benefit corporation mission is going to be ensuring AGI benefits all of humanity. And they are legally required to consider that mission with every decision that they make. The nonprofit will control and also be a large shareholder of the PBC, giving the nonprofit better resources to support many benefits. And their mission will remain the same. The PBC will have the same mission. So why did they do this? Before I tell you why, let me go over the history a little bit. So 2015 to 2018, in November 2015, OpenAI is founded as a nonprofit. Immediately, Musk, who was a co-founder and I believe donated $50 million to the nonprofit, questioned the structure, suggesting that a more traditional for-profit company would be better in the long run. Early on, he already knew they were going to need to raise a ton of money, and being a nonprofit would make that very difficult. Then in 2017, Musk and Sam Altman and OpenAI had a falling out. Musk wanted full control. He wanted to be CEO. He really wanted to make all of the decisions, and OpenAI, Sam Altman, Greg Brockman, all of them said basically, no, thank you, see yourself out. And so Elon Musk left OpenAI around that time. Then in 2019, OpenAI, realizing and they wanted those shares to be worth something, they created OpenAI LP, a capped profit subsidiary to attract funding while maintaining its mission. Then rumors started circulating that OpenAI was trying to convert to a full for-profit company. And of course, Elon Musk having started XAI and really trying to convert to a for-profit, basically saying, I gave you all this money, you raise all of this other money without paying any taxes, because that's what happens if you're a nonprofit. You can raise a bunch of money and not pay taxes on it. And now you're trying to convert to a for-profit after you've already extracted all of the value out of those investments. And it wasn't just Elon Musk that thought it was shady. There was a lot of people who questioned the motives there. Then just a few months later, Elon Musk withdrew the lawsuit, and then a few months after that, he reinstated it, and also included antitrust claims against OpenAI and Microsoft. Then just a couple months ago, Musk and a group of investors tried to acquire OpenAI. They offered $97.4 billion for OpenAI, which actually was quite a good offer. But I don't think they really wanted to acquire the company. Instead, what they wanted to do was disrupt the conversion from nonprofit to for-profit. So essentially what would have happened is the for-profit would have acquired the nonprofit. And now that they had an offer for, let's just say, $100 billion, that was now the valuation of the company. So if the for-profit wanted to acquire OpenAI through this internal transaction, they were going to have to pay up $100 billion. So he basically played a really interesting game, setting the price for OpenAI very high. Then a couple months later, OpenAI countersued Elon Musk, alleging bad faith tactics to try to disrupt what OpenAI was doing, because yeah, Elon Musk was building XAI, their direct competition. And so in my opinion, both sides had bad faith actions. Now back to the letter that OpenAI released just today. Let me read a few parts to you. OpenAI is not a normal company and never will be. That is the first sentence from the letter from Sam Altman to OpenAI employees. And he has said this before, and that might just be an excuse to do all these weird things internally, but at the same time, they're not a normal company. Our mission is to ensure that artificial general intelligence benefits know how to best execute on their long-term vision. That's why they started with a nonprofit. They didn't know that eventually they were going to become a for-profit, and they certainly didn't know that they would be the fastest growing product of all time. Back then, we did not contemplate products or a business model. We could not contemplate the direct benefits of AI being used for medical advice, learning, productivity, and much more. Or, and this is the important part, the need for hundreds of billions of dollars to compute to train models to serve users. Now that is the key of why they wanted to convert to a for-profit. Because here's the thing, if you have a nonprofit, it's not great for investors. Basically, as an investor, you're just donating the money with no expectation of returns. If it's a for-profit company, you're expecting returns, and thus they would be able to raise a lot more money. And what Elon Musk and Sam Altman figured out around 2017 is they were going to need a lot of money because all of these models are incredibly expensive to train. And not only to train, to serve as well. And so they describe this really interesting place that they're in now. They have much more demand for their products than they could supply. Even though they're making so much money, they are serving so many requests, they are still overloaded with demand. Listen to this. But they want to use it much more, they being users. We currently cannot supply nearly as much AI as the world wants, and we have to put usage limits on our systems and run them slowly. As the systems become more capable, they will want to use it even more for even more wonderful things, and that's Javon's paradox. As the unit cost of intelligence approaches zero, people are not going to purchase less of it, they're going to purchase more of it, because the math on use cases that were previously too expensive all of a sudden becomes manageable. So it is time for us to evolve our structure. There are 3 things we want to accomplish. We want to be able to operate and get resources in such a way that we can make our services broadly available to all of humanity, which currently requires hundreds of billions of dollars and may eventually require trillions of dollars. Now, remember, with Project Stargate, and they're raising hundreds of millions of dollars up to trillions, all of that money is going to go into building their own, essentially, AI factories. That is US-based GPU clusters to train and run inference on the next generation of models. We believe this is the best way for us to fulfill our mission and to get people to create massive benefits for each other with these new tools. Next, we want our nonprofit to be the largest and most effective nonprofit in history. Now, that's very interesting. I think they're setting up expectations for this nonprofit to be able to actually take much more money than any other nonprofit in history and potentially give investors returns, although I'm not sure how that's going to work. And last, we want to deliver beneficial AGI, and they go on to talk about safety and alignment being incredibly important to them. Now, here is the critical line. We made the decision for the nonprofit to stay in control after hearing from civic leaders and having discussions with the offices of the Attorney General of California and Delaware. To say that they made the decision, I think the decision was made for them. And I just wonder how much influence Elon Musk had in the pressure campaign that was likely put on OpenAI to not convert to a for-profit. And to be clear, conversion from a nonprofit to a for-profit really hadn't been done before and seems, at least in my very basic understanding, very shady. They raised all this money through donation. They didn't pay any taxes on it. They invested those donations into research that eventually became ChatGPT, the fastest growing product of all time. And now they want to convert to for-profit to take advantage and maximize the monetization of these products. And Elon Musk has been incredibly vocal about his dissatisfaction with OpenAI and specifically their attempt to convert to a for-profit company. Take a look at some of these posts on X. OpenAI was created as an open source, which is why I named it OpenAI, nonprofit company to serve as a counterweight to Google, but now it has become a closed source maximum profit company effectively controlled by Microsoft. Not what I intended at all. Here's another one. I wonder if there will ever be an investigation into OpenAI and how they went from a nonprofit to a for-profit and became worth $90 billion. Musk, there absolutely will be. Either their structure is valid and everyone should be doing it because investing in a nonprofit with pre-tax money and then extracting the IP to a for-profit would double your returns, or it is not valid and the entire structure of OpenAI falls apart. And as a reply to a report about his injunction, OpenAI going from nonprofit to maximum profit is a total scam. So you see the pattern here, and there are many more posts just like this. So they're coming up with a new plan. They scrapped the idea of converting to a for-profit. They're probably still gonna try something else because look, they have the hottest, most important product on the entire planet, and they need a way to attract and retain the best AI talent in the world, the best engineers, the best AI researchers. They also need a way to attract billions of dollars, potentially trillions, as they said, in investment to design their own chips, to buy NVIDIA chips, to train their next generational models, to run inference and serve the next generational models. All of this is incredibly expensive. So there is no change that the nonprofit will remain in control. The for-profit LLC under the nonprofit will transition to a public benefit corporation with the same mission. And I really like that, as I said earlier. PBCs have become the standard for-profit structure for other AGI labs like Anthropic and xAI, as well as many purpose-driven companies like Patagonia. Patagonia is kind of the golden example of this PBC structure. Instead of our current complex capped profit structure, which made sense when it looked like there might be one dominant AGI effort, but doesn't in a world of many great AGI companies, we are moving to a normal capital structure where everyone has stock. This is not a sale, but a change of structure to something simpler. So that's it. Let me know what you think in the comments. If you enjoyed this video, please consider giving a like and subscribe, and I'll see you in the next one.
Welcome back. Well, the U.S. has signed the long-awaited minerals deal with Ukraine, giving the United States access to Ukraine's key rare earth minerals. The agreement states, quote, Ukraine retains the right to determine the areas within the territory as well as its territorial waters, exclusive economic zone, and continental shelf to be made available for the exercise of the activities of prospecting, exploring for, and producing natural resources. U.S. Treasury Secretary Scott Bessent is with me right now with more. Mr. Secretary, thanks so much for spending the time and joining me this morning.
Good morning, Maria.
Congratulations on this deal. This is a big deal. Can you walk us through what's most important here?
Well, Maria, it's a big deal. And I have two words for the President Trump's agenda: peace and prosperity. And this moves both America and Ukraine in that direction. The deal was something that President Trump conceived back in February. He dispatched me to Kyiv to present it to President Zelensky. So we've been working on this. This was first presented to Ukrainians on February 10th. We signed yesterday. As you know, there was a bit of turbulence in between, but I think that this is win-win for both sides, and it's very innovative. The easy thing to do would have been to give the Ukrainians more loans, pile on more debt, tax the American people more, and lose the support of the American people. Here, the Ukrainians can see a path to economic prosperity once this conflict ends, and the U.S. businesses, U.S. best practices, U.S. capital will be part of that.
Yeah, I mean, you know,
Yeah.
we were all wondering if you were
this
going
the
to be able
MACD
to close this.
crosses,
I
if
understand
the
how important
MACD
these rare earth
crosses,
minerals are.
we
President
going
Trump spoke
up.
with Zelensky at the Vatican in that iconic shot that we're looking at
We
right
going
now.
up.
Was that conversation what closed this deal?
We were moving
If the
along,
MACD
but
crosses,
all these
I
deals
said
are
we
the
going
president's
up.
deals, and no one creates leverage like he does. No one closes like he does. There was the blow up at the White House where we were supposed to sign that day, and
Right.
President Zelensky created the blow up.
If it crosses,
now the President Trump and the meeting at the
Man.
Vatican went a long way towards pushing this over the goal. As President Trump said in the Oval that
Sat
day
there
to
and waited.
Zelensky, you have no cards. Well, you know
Can I
what?
get the Mac? Can the
President
Mac
Trump has
be?
now
Can it
built
do
in
that?
a royal flush.
I
Because
need that.
now we can
I want
take
that.
these
That.
cards and go and show the Russian leadership that
Can I get the
that
Mac
there
D to
is no
cross?
daylight between the Ukrainian people, the American people, between our goals. So this is very innovative, and
chippy on
President
that
Trump,
movie.
as always, pushed this across
Get real
himself.
chippy out
Yeah,
here.
wow, what a deal. So, no daylight. Does that mean that the U.S. is going to provide military support, increased military support for the Ukrainians in this war with Russia? That's number one. And number two is, when we were all speculating about this deal, there was some
Man, get
speculation
chippy.
that 50% of the revenues would go into a fund that the U.S. had access to in terms of the value, 50% of the value of here.
Sure. So, this is an economic partnership. So, we are going to accelerate the Ukraine economy. And as the president says, as I always say, economic security is national security. National security is economic security. So, a strong Ukraine post this conflict will help Ukrainians maintain their national security. In terms of the deal, Maria, this is a total economic partnership. This isn't just rare earths. It's infrastructure, it's energy. So there's the opportunity here for both sides to really win. And again, what this isn't, it isn't one of these rapacious Chinese deals where the more powerful side goes in, says, here, sign away your national patrimony. We don't make, the American people don't make any money if the Ukrainians don't prosper. So now we are fully aligned in terms of economics. And again, I think this is a strong signal to the Russian leadership, and it gives President Trump the ability to now negotiate with Russia on even a stronger basis, as opposed to the daylight that had been previously created between the U.S. and Ukraine.
Okay.
Oh man, what I tell you, boys.
China, and I want to ask you about China because I understand that with regard to these trade deals that you all are working on, you've been focused on the China end of it, and some of your colleagues are looking at other countries. Secretary, what exactly do you and President Trump want to see from China in terms of getting these tariffs down? The president put in this 145% tariff. China comes back with a retaliation of 125%. What do you want China to do?
Well, I think this is going to be a multi-step process, Maria. I think first there will need to be a de-escalation on these very large tariffs. 145 and 125 are not sustainable on the Chinese side. We saw some very poor GDP numbers out of them. Out of China yesterday. We're now seeing very large estimates of job growth loss from 5 to 10 million jobs. So the Chinese economy is slowing down substantially here. So what we will first want to see is a de-escalation. We will likely revisit the purchase agreements that were put together in the first China trade agreement in January of 2020 to make sure that the Chinese are honoring those agreements. And then we are going to push for fair trade with China. They are the most imbalanced economy in the history of the world, and they need to rebalance. Now, Maria, the big deal that could be done here is President Trump is oriented the U.S. toward a manufacturing economy, taking us back to the strength that's been sapped over the past several decades. Everyone knows.
This host endorsed how Andrew Barry looked and how, to me, it was a shock.
What's going on, y'all?
Let's go. Yeah, I'm not monitoring more than 2 trades.
The startup behind
Yes.
the AI programming tool Cursor has reportedly hit a $9 billion valuation, a sign of just how quickly AI first coding or vibe coding is growing in Silicon Valley. Kate Rooney has more on the trend in today's Tech Check. I love this story, Kate.
Carl, yeah, we're hearing more of that term, vibe coding. And we're also finding out and seeing more evidence that one of AI's emerging superpowers right now is writing software and writing code. That has been on display lately with the rise of Cursor, which you mentioned. It's an AI tool that helps engineers outsource coding to artificial intelligence, and it's driving some of the latest mega valuations we're seeing in Silicon Valley. We saw the Cursor news as well. Mega cap companies like Microsoft and Meta are also jumping in on this trend. They're talking a lot more about it. Out here in the Valley, they do call it vibe coding. So it's essentially a way to write code more casually, quickly. You put in a text prompt about what you actually want to build, and you go by the feel or the vibe instead of necessarily having to write every line of code and know those complicated coding languages. It also lowers the barrier to writing all this code. It makes it easier to build an app or a feature without really knowing these coding languages. So the bar is coming down overall. Startups have been on the front lines using this. Those I talk to say it's making them leaner, it's making them more profitable at the early stages. They don't need to hire as many engineers. And just last week, we got even more evidence that it is happening for big tech too. So Microsoft CEO Satya Nadella saying right now that AI is writing 30% of their code. Mark Zuckerberg at Meta said it's going to be writing as much as half, 50% of code at Meta within the next year. Amazon has told me something similar. It's writing about a third of their code. And it's not just big tech. Visa CEO even said last week and told me that the payments giant is using AI for coding in the same range. He said it's about 30%. And despite all the talk about productivity, we didn't see any evidence of this starting to flow through to the bottom line, at least this earnings season so far. Nobody's talking about what it meant for profitability. Analysts tell me it's going to help these companies roll out products more quickly. We're going to see it more on productivity, less on profitability. AI is going to be able to handle some of the easier coding jobs. We're now leaving those higher priority tasks to the human engineers. Companies may still need to hire fewer engineers. And as a result, there is some anxiety I'm hearing from the tech labor force around it. Although in the near term, AI-related software job postings are actually up month over month. About 10% of total software jobs out there, according to Aura Intelligence, guys.
That's interesting, although you have to wonder what young software engineering graduates are thinking at the moment, Kate. I am curious, when it comes to the early stage slide deck, does this mean they get profitable faster, or is it simply about initiating that code faster?
That's what we're hearing. So we were at the Y Combinator demo day, which is about the earliest stage you can get in. It's the seed stage. These companies are saying, we're building teams and building companies with 5 people, whereas think about even 2 years ago, they would have needed to hire 50 people at this stage. So it's making them leaner, not quite profitable or breaking even yet, but they're able to grow more quickly, compete at this ability to build new apps. And there's other software applications that say basically you can just tell something, hey, I want to build a new CNBC app. You just verbally speak it, and it's just mind-blowing what it can do. And even in the month that since we started reporting on this, it's changed drastically. The folks at YC were saying it changes every day, and the features that they're able to use didn't even exist a year ago. So this is like dog years in tech.
Joining me now, Taylor Riggs, co-host of the Big Money Show right here on Fabulous Fox Biz. Steve Forbes, the great Steve Forbes, Forbes Media Chairman and Editor-in-Chief, and Jerry Willis, Fox Business Correspondent. We didn't solo you today, but what were we up, almost 600 points?
Yeah.
Where are we in this thing?
Yeah, we were up 500 and change on the Dow. It was 1% plus for every index. This report, it hit on all cylinders. The top line, 177,000 jobs, expecting far less. We got a really strong report there. And if the devil's in the details, let me just give you a couple of details. For example, we saw 29,000 additional jobs in transportation and warehousing. Where do you think that people thought the economy would be cut? Warehousing, because of tariffs, right? Didn't happen. And guess what? We saw shares of FedEx go up 5% today. So it's an interesting what's going on here. Crude oil below 60 bucks a barrel. We're hitting on all cylinders here. We might just want to pull the plug on the market this year right now and then stop as it is.
Taylor, the Bears are running for the hills. That's all. They can't get there fast enough. They're going in their Porsches and their Rolls-Royce Bentleys and they're running for the hills, the Bears. It's a rout.
I love this. So this was the best Friday
Lamborghinis. Because it was the hedge fund guys who were the most bearish, touting their book every chance they got. And when, I don't mean to interrupt your narrative, but when the report came out in the financial section of the Wall Street Journal, retail was buying on the way down. It was the hedgies who lost their shirts.
And we all feel so bad.
They need a little God, they won't take it, but they could use it. Now, please, this is an unbelievable story.
It is. So look, this is the best Friday reaction to a jobs report that we've gotten in 2 years. This is the longest winning streak since 2004 and the best winning streak in that 9 days, up more than 10%, as you mentioned in the riff. ever for the S&P 500. I love that I quoted this, that the S&P was at 5671 the minute the market closed on Liberation Day, and we are well above that. So if you had just stayed the course, had a little faith that yes, tariffs were going to be a little bit rocky, but it's economic Armageddon that we kept talking about, certainly, at least for now, has not come to fruition. When we think about the markets and jobs data, I woke up this morning and I saw the numbers come in and I thought, this feels like American exceptionalism is back, in the sense that it doesn't mean that things can't get worse. Doesn't mean the market doesn't fall on Monday, or that jobs might not be lost in the future. But we came into Liberation Day underestimating the resiliency of the smart CEOs who said, I'll figure it out.
Yep.
Apple, Tim Cook is one of the ones who said originally 80 to 90% of the iPhones are made in China. 50% are now in India and Vietnam for what the U.S. consumer buys. He wants to get that to 100% by the end of next year.
And Trump's giving him a break for the rest of it.
And so this
almost
is
like a credit.
Yeah, so a CEO who is looking at the situation and saying, how do I rely on the American consumer, the best minds, the best technology we have to pivot and to figure it out, and we might survive this thing.
You know, on all that, from Taylor's narrative, Steve Forbes, it's interesting. We'll come to the central bank, as we always must, in their $2.5 billion monstrosity that they're building that Elon Musk should take down. But I'm more interested, they have a meeting, I think it's next week,
Yes,
May next week.
May.
I don't think they're going to cut next week. They should, but they won't. But here's the thing. What you've got here is good growth and no inflation. Good growth, no inflation. The Fed would argue good growth, high inflation, tighten policy. You would argue growth spurs no inflation, and the Fed should stay out of the way. So the challenge is going to be to see whether Jay Powell and his pals can adjust to some of the new realities that are going on. You basically got a supply-side economy run by a supply-side president who, yes, has a lot of faith in God, and which is anti-inflationary and pro-growth and pro-wages and pro-profits. That's what's happening here. That's what the early days are showing us.
Well, and that's why the next 100 days are going to even be more important than the first 100, because we got the tax bill coming, got the Fed you're going to have to face down, tariff deals hopefully coming down the pike pretty soon, and well, what you see now in Ukraine, he's woken up that Putin's playing games with us, and I think he's waking up that the mullahs are playing games with us. So I think we're going to see a good foreign policy in the next 100 days. So that gets things back on track.
How about the minerals deal? The minerals deal, maybe I should...
Well, the minerals deal is quite good. It shows that America's going to be there. And if we back that up with a good thing of helping the Ukrainians out with some weaponry, that gets Putin's attention more than sanctions will.
You know what else?
You can get a good deal there.
Super sanctions, secondary sanctions on Iranian oil. Terrific stuff. Pounding China. We'll probably talk about this later in the show with the expert.
But the problem with the Fed is they don't know what to do. The Phillips curve is not working. And so they're going to probably just sit in their hands and just wonder what they do next. And they don't realize price rises that come from tariffs, they can't do anything about. So leave the interest rates out of it. And they're still shocking that short-term interest rates are still higher than the 10-year bond and the 30-year, almost a 30-year bond, not quite, but almost. And that shows the markets are still skewed. So get out of the way. And I don't think Jay Powell and his people there know how to do it. One of their governors gave a speech the other day, Kugler, I think it was, Dr. Kugler, Adriana Kugler. She talked about the Phillips curve and inflationary, lovingly, and inflationary expectations.
See, I don't want
stuff
faith
like
in the
that.
Phillips curve. I want faith in a higher power. The Phillips curve is not my higher power, in case you weren't watching.
It's the work of the devil.
Yes, thank you for that. By the way, that is exactly right. You nailed it. Jerry Willis, household employment, which many of us think is a very important measure, that's where the unemployment rate comes from, was out 436,000. 436,000.
People getting up off the couch and they're getting into the labor force.
The civilian labor force increased by 518,000, speaking of getting off the couch and going back to work. And our pal Joe Livornia points out another decline in federal payrolls, 9,000 decline in federal payrolls, the fourth consecutive monthly drop. This is the reprivatization of the economy that Scott Besson talks a lot about. And another one gets you to react to from Joe Livornia. In the household employment, native-born, now follow me, native-born workers increased a massive 1.042 million. 1 million plus in native-born workers, while employment of foreign-born workers fell 410,000. Now, Wall Street has been telling us, these brilliant hedge fund guys, we've got to have 15 million illegals to take the menial jobs and be the maids of the hedge fund people, and maybe their drivers or they can get a license. Wrong. Look what's happening here. The border is secure and safe, and now the foreign-born jobs are going down 400,000, and the household domestic native-born people up a million in the 1 month. That's extraordinary.
It is extraordinary, and it just goes to show you like how very wrong common perceptions were about what's going on in this country. Taylor mentioned this in her fine show today, these very numbers that you're describing right now, and I love seeing people get back to work, because having a job, being employed, it orders your life, right? It gets everything done. It improves your life. It makes you invest. It makes you buy a house. It makes you have children. I mean, it is a solution.
David Bonson and I talk about this all the time. Work is godly.
Dignity. There's dignity in work.
That's it.
You know what else stood out to me
Real quick. They're yelling at me already.
Hours
We're
worked.
just starting out.
Hours worked went up. If I'm a CEO and I'm worried about how much I'm going to pay you, I'm going to cut your hours. Your hours increased.
Terrific. The tariff scare, it's kind of reminds me of Y2K, that scare, which turned out to be absolutely nothing. If people can remember Y2K at the turn of the century. I was alive then. Thank you, Jerry Willis, Steve Forbes, and Taylor Riggs. We appreciate it. What a bullish Friday. Be sure to catch Taylor with her co-hosts Brian Brenberg and Dagan McDowell and Jackie DeAngelis on The Big Money Show. Weekdays, noon to 2 p.m. Eastern, right here on Fabulous Fox Business.
Welcome back. President Trump cutting automakers a bit of a break on some tariffs. He signed a pair of executive actions yesterday, relieving domestic car makers from paying stacked tariffs, several different tariffs, allowing them to qualify for relief over 2 years. As the industry boosts domestic supply chains, the president explained it away yesterday. Watch.
We just wanted to help them during this little transition, short term. And during this little, if they can't get parts, you know, it has to do with a very small percentage. If they can't get parts, we didn't want to penalize them. And they have a 1 year period, and then they have an extra year, but it's for a very, very small part of the car. But basically, they're paying 25%.
The big three automakers responding. General Motors delayed its analyst call and pulled guidance until further clarity comes in. Mary Barra will join us tomorrow. Stellantis reacted with appreciation, but is, quote, further assessing the impact. And the CEO of Ford, Jim Farley, expressed support, saying his company will continue to work closely with the Trump administration. Take a look at auto stocks this morning. About an hour and 15 minutes before the opening bell sounds, a mixed story. Joining me now, the man himself, the CEO of Ford, Jim Farley, is with us. Jim, great to see you. Thank you so much for being here.
Hi, Maria. We're here at the Kentucky truck plant, our most profitable plant in the country. Thanks for having us on.
Yeah, I want to hear about the Kentucky plant for sure, but give us your reaction to what you heard from President Trump. Is this softening the blow for your company, and how will it impact Ford?
Well, first of all, Ford is really different. We make 80% in the U.S., more than any other manufacturer. In fact, we made 400,000 more vehicles than our next competitor, and that would fill up the entire island of Manhattan. That's how big of a gap we've made. So, look, we think this is really great for the country. We really support the president's initiative. We never left the America on car production, and so this moderation is reasonable, I think, for mostly our competitors. They need more time, but at Ford, we're in good shape. and this is the right thing to do. We really appreciate the dialogue we've had with the president, but we have a lot more work to do with him and the team.
Yeah, I mean, look, that's why we really wanted to talk with you, Jim, because I know that you are among the most U.S.-centric automaker with the 80% of the vehicles made here. But really what we want to get your take on are the auto parts. And some of those parts are coming from different places. So when you see this kind of softening, is it going to have a big impact?
Well, look, first of all, 50% of all vehicles sold in the United States are imported. They come through our ports. Imagine that, 50%. Just 30 years ago was 90% made here. So this is a big deal. Literally, that 8 million vehicles that are imported would be 20 assembly plants like Kentucky here. We're talking 1 million jobs. So moderating the parts, that 10 to 15%, as the president said, to make the vehicles more affordable is reasonable, but we have to look at whether these policies really change our competitors' commitment to America. If our competitors made the same commitment as Ford did, that'd be 4 million vehicles more built in the U.S. That'd be 10 assembly plants. So we got to see what the competitors do.
So tell us about the Kentucky truck plant and all of those jobs there supporting the 9,000 direct employees and 100,000 indirect jobs, right?
Yeah, I mean, this is one of the biggest, most profitable plants in the world. Certainly our most important. It makes the Super Duty, the new Expedition and Navigator, super popular vehicles, and we're #1 in the Super Duty. This is the example of what the president is trying to do. If I could take all of America, walk around this place, you meet 9,000 people whose kids are going through college. These are good jobs. But in the summer, it's 120 degrees. It's a hard job too. But this is what Ford has always believed in. We never left. And this is what the president's trying to do to our country, to make these kind of plants, like 10, 20 more of these across our country. And it will really change our industry.
So are you expecting to build more plants in America then?
Well, we never left, and our plants are pretty busy. But we are building more. We have a new plant in Ohio, a new plant in Tennessee. The cranes are up. We're expanding at Ford. We're more than 85% now of our vehicles built here. We're the #1 export in the United States of automobiles, but we are building 2 brand new plants. But no one had to ask us to do it, Maria.
Yeah.
Best viewers, I see you. back in right there. Let me sell these out real quick and turn this down. See what we got. Yeah, that sucks. Let's get out of that trade. So I'm about to get off. I'm not leaving these open. I hate losing money. That's gonna pop though. See, actually, see if I could watch it just to see what I missed out on. Meme sexual moonbot.